Hey guys, Stock Saturday, and we're starting to sort of digest the Trump win, and it's been a slightly green week for me, about 3.5% up, about 14,000. I've not bought anything at all in the sort of even in the option side or on the stock side. Still got sort of between the invest and the ISA side about 27,000 in cash, about 28,000 nearly. So yeah, sort of weighing up various stocks to buy, and haven't quite pulled the trigger yet, but still sort of getting about 5% on uninvested cash. So it's not really in super urgent hurry, although I don't like sitting on cash for all that long, as I'm sure you guessed. But yeah, some sort of reasonable gainers. TSMC doing quite well this week, and sort of crypto having another decent week. CleanSpark sort of shooting up towards the end, and gold and silver sort of coming back from what appeared to be a fairly big, Trump-inspired drop. But yeah, that's sort of come back and not done too bad. So yeah, sort of 3.5% compared to markets. S&P up 1.62%. So fairly good, and yeah, Nasdaq pretty much the same, 1.59%. So yeah, still sort of S&P pushing up almost towards the previous highs after the Trump win, and yeah, looking quite good. So getting into some earnings, and obviously one that I'm sort of longer term interested in, sort of pondering whether to add a little bit more to the interactive brokers side, and maybe not put it into options, just add to KGHM. All of my holding at the moment is in the ISA, but can't put any more in for a little while. But yeah, they've released their presentation. There's a lot of sort of obviously fluff in here about sustainability and climate reduction and that sort of thing. They're obviously not climate friendly, but the world does need copper, so they are sort of admittedly trying to go for more renewable energy generation and not rely so much on drawing from the market. They have this 2030 goal of 50% renewable, 50% of their energy production coming from renewables, and then sort of or energy demand coming from renewables, and 50% being purchased off the market. 2020 they were at 78% and 22% renewables. The last 9 months they're actually just under 20%, so they have gone down, which isn't ideal, but they have sort of plans to increase this a great deal, looking at various things. Nuclear, potentially. Everyone seems to be looking at small nuclear reactors, AI in particular. So yeah, interesting to see where they go with that. They sort of make some macroeconomic comments and sort of comments on prices of copper and silver. Sort of silver doing okay, I would say, but longer term, still sort of very much bullish. Even sort of go into GDPs of various countries. I do like this little sort of summary of key performance indicators, basically. You sort of give their 2020 base year and 2030 goals. So domestic copper production doesn't really rise all that much. That's fairly sort of solid yearly production, which I'm quite happy with, especially for the valuation. And yeah, they're at 441,000 tons for the first 9 months of the year. So sort of goal, of around about 560 to 600,000. That's looking pretty solid. International production is 102. So yeah, they were at sort of 150 for the year a few years ago. 102 for 9 months isn't too bad. Silver production, they're sort of projecting to drop slightly, but yeah, 981 tons of silver for 9 months. Look, should be a reasonably good total for the year, sort of high 1200s, maybe 1300 tons. So very nice. Energy produced, they're sort of noting, 428 is lower than if you sort of take an equivalent amount for the year, they are lower than where they were in 2020. Long way to go, basically. Recycling of scrap hasn't moved at all. They're looking to do 350 tons a year of copper scrap, and they've gained 0.1 ton since 2020. So I thought that was quite funny. And coming on to financial results, not really sure why they show gold as their sort of picture here, because they don't really do any gold, but highlighting precious metals and money, I suppose. But yeah, looking at the 9 month, they're sort of flipping between 9 months and Q3 in various points. But yeah, group revenue up 2% on last year for the 9 months. EBITDA up quite a bit because of their international side. And their Q3 EBITDA broken down by region. The international side was sort of holding things back in Q3 last year, sort of most of 2023. International side has now gone to 460 million. And yeah, the sort of main Polish enterprise is up slightly from last year. And yeah, Sierra Gorda sort of joint venture is up a reasonable amount as well. And this is largely due to sort of energy prices coming down. Yeah, materials, fuels, and energy factors down sort of just over $1 billion, really, in Polish, of course. And purchased metal-bearing materials down. So, yeah, basically, cost of mine is down slightly. They sort of give their cash cost, which I kind of wish was a proper sort of all-in sustaining cost, but that is what it is. For the group, down from 294 to 275. So with the sort of reduction in copper over a sort of a recent period does help with costs coming down. This was largely due to the international side. They sort of noted that a significant decrease in costs was last year they were mining low copper content zones and they struggled with technical problems. So yeah, last year basically they were mining at 532 US dollars a pound with sort of $3.50 price. So it was a loss-making enterprise. They're now at $1.69. So very profitable. Obviously, you've still got some admin and bits and pieces to go on top of that to make it up to an all-in sustaining cost. But yeah, 169 cash cost is pretty good. Sierra Gorda at 181. So the whole international side really is very much profitable, more so than the main operation. That's increased 2%, but yeah, $3.08 with again a little bit to add on to that when we're at sort of still $4.10 now on copper price. So going forward, that's not the end of the world, but we would like to sort of see $5, $6 plus in copper. And so all this adds up to, for the first 9 months, a profit increase from 836 million in Polish to 1.3 billion. So not too bad. Cash flow wise, they have decreased slightly. It's due to a lot of capex and sort of debt and repaying debt and things. Not too bothered by that. That seems fine. And debt-wise, not looking all that bad. Debt's up slightly from previous quarter last year, 1.28 billion US dollars. And they sort of show you why. 5 billion in Polish, so it's up slightly, but they've had various sort of things going on, capex and maintenance of various mines, and yeah, that's a very low level. Net debt to adjusted EBITDA of under 1 is always fine, really. And they are doing a bit of risk management, of course. Not a huge amount, though. Copper, so this is 1,000 tons. They've got sort of first half of next year, 18,000 tons hedged, which, they're doing sort of, what would it be, close to 300,000 tons in copper for the first half. Yeah, to be hedging sort of 18,000 tons is nothing really. Similar on the silver side, basically. Sort of, this is 1,000 ounces, so yeah, 1 million ounces for first half of 25. And if I'm sort of calculating this right, that's 1 million out of about 25 million produced. So yeah, they don't really sort of do a huge amount of hedging. They call it market risk management, but yeah, I would kind of think if you can take it, uh, cash flow wise, then don't hedge, because I think these should do fairly well. So overall, I still really like what I'm seeing. I think this is the best sort of mix that I can think of. Essentially, all copper and silver. A couple of small contributions from molybdenum and that sort of thing. Doesn't really amount to a huge amount. Yeah, I sort of see this as similar to someone like Southern Copper, with a much lower multiple due to sort of much higher cost. But if the price of the commodities rise, then you get a more sort of explosive move with a higher cost miner, and they're in sort of a less favourable market. Southern Copper sort of being on the American side, but I think if the commodities do well, then profit sort of shouts from the rooftops basically, and the multiple will come. So yeah, I'm positive going forward, and I may be adding with some of this crypto money. So moving on to Himax, the Q3 earnings, it's sort of looking okay. Beats on revenue. They were expecting a 12% to 17% decrease on previous quarter on revenue, and they declined 7%. So it's a decline, but a beat. Gross margin was near enough what they expected, down 2% quarter on quarter, what they expected at about 30%, and they were guiding 1.5 cents to 4.5 cents earnings, quite a wide range, but they come out with 7.4 cents, so a reasonable beat. And yeah, they're sort of seeing this still mostly from auto drivers. The sort of automotive sector is the largest growing sector overall. Sort of basic display panels down quarter on quarter for the most part. And they're highlighting their inventory levels have sort of come down to a more manageable level. They obviously don't want this to get to, very, very low levels. They need some inventory, but they say sort of $200 million worth is sort of a more sustainable level, and they don't have to be cutting prices to try and shift it. And yeah, cash balance down to 206 million due to the annual dividend payment. So that obviously won't be happening in future quarters. And their guidance is sort of not amazing, flat to slightly down sequential revenue, sort of still. We've had quite a few quarters of it's okay, but things are looking up going forward, and we're sort of at what was previously going forward, and it's still not looking all that great. But yeah, gross margin flat to slightly up, so that's not too bad. And net profit, we're at 7.4 cents this quarter. They're expecting 9.3 to 11. So yeah, revenue fairly flat, but profitability starting to come back. And they sort of, basically blaming this on the macro environment. China sort of not looking super strong at the moment, even with stimulus. But they see 2025, positive outlook with automotive AI sections and OLED sort of display panels looking good, and they are optimistic. And just looking at economic news, we got sort of EU inflation, sort of official numbers. They always give the preliminary numbers quite early, and official numbers are sort of right on target, 2.7%. Core CPI, sort of not ideal. Everyone wants to be at 2, but it's not looking like that's going to happen. Fed sort of GDP looking up slightly, 2.6%. UK inflation sort of up to on target basically, 3.3% core CPI up from 3.2 was expected to drop, and yeah, headline CPI up from 2.3% up from 1.7%. So not ideal. We were at under our target, and for I think that was 1 month basically, and we've now popped above it again. Energy prices, it's looking like has moved most of that up, but core is up as well, so it's not just that. US sort of jobless claims continuing jobless claims did tick over 1.9 million, even if initial was slightly lower. So I guess the people that are losing their jobs are sort of not finding one, and they are continuous. So there might be slightly less than expected new people, but the people that are getting laid off aren't finding a job as much. And yeah, the UK sort of having higher inflation and considerably lower retail sales. Not exactly a great combination for retailers. Core retail sales down 0.9%, only up 2% on last year. And if you've got inflation, obviously that's 2% is less than the inflation. So it's in real terms, it's effectively down on last year. So not ideal, and sort of PMIs and things all largely below 50. EU manufacturing PMI at 45, you would think is sort of pretty much recessionary. And that was pretty much it for the news. Not a lot of US news particularly. They'll have a sort of busy news period. I think next week and the week after certainly. But yeah, portfolio wise, sort of still, as I say, a little bit of cash in the ISA, but not a huge amount of change. CleanSpark had quite a good week, as I say, up 16% on the Friday. That's pretty much all the move. Didn't really see anything sort of particular from them, but yeah, gold and silver sort of doing reasonably well. Got my Pan American and KGHM sort of barely moving really. These were sort of combined about 26.5, I think. So yeah, up to 27. And yeah, the option side has been quite volatile. I haven't sort of reordered these. Hive was much higher than that last week. Riot sort of quite a bit below. Overall, it's about $3,000 up, but yeah, certainly sort of some moves. Equinox up a reasonable amount. That was sort of 8,000 down last week. Coeur Mining up slightly. Himax up ever so slightly. It's has had an okay week. But yeah, not really adding too much. Don't really have a huge amount of confidence in adding anything sort of just yet. Sort of maybe see how the end of the year goes if we get any pullbacks in anything. Certainly expect a pullback on Bitcoin. Sort of if we do get to 100,000, maybe it could sort of get there and have a ton of profit taking, or it could sort of shoot through it to 110 or something and then have a bit of a pullback. Yeah, certainly the miners have not particularly performed. So we've had $30,000 up in Bitcoin, and sort of miners, well, since the election, just before the election, and the miners sort of haven't really gone too far. I'm not even sure they've kept pace with that sort of percentage. Certainly in like Hive and Riot's case. So you would sort of think generally they're levered Bitcoin, but it's not working that way at the moment. I do still maintain that they're all sort of expanding too much. The US miners don't amount to the whole market, of course. You've got China and various other sort of states and countries mining now as well as sort of the just smaller miners all over the world. But yeah, I sort of think if the US miners all sort of double their hash rate, then all you're doing is getting a similar amount of Bitcoin and pushing costs up. So yeah, not ideal. You could just say that the US are gaining market share over the Chinese and others, but yeah, I expect the Chinese sort of get a reasonable deal on the miners from places like Bitmain. So yeah, it just means hash rate for everyone's going up and profitability not so much. Similar to what happened with the gold and silver miners, really. Everyone sort of is purely comparing gold price to where it was, a few years back, and sort of obviously we've had enormous inflation. Everyone running the mines has had sort of 20-30% pay rise. Other costs have gone up, so profitability doesn't expand quite as much as the price would suggest. So yeah, I still think we'll get a decent move on some of these next year. So I'm holding on to all these positions because most of them sort of run for the rest of next year. The Equinox ones that I am sort of not been buying this week, but I have been buying are all of 2026 as well. They expire January 2027. So that's about 160 of these now. So getting quite a big position. And the only real sort of conviction that I do have for 2026, basically, other than sort of long-term holds, stocks that I'm potentially looking to buy, but still looking into those at the moment. So yeah, leave your thoughts in the comments if you guys are sort of buying anything, if you're euphoric over the 100k crypto or 100k Bitcoin at least, and like and subscribe. See you soon.